Record. Ladies and gentlemen, dear traders, welcome. This is another episode of the Trader to Trader podcast. And today we have Zoltan, an amazing trader. Our last podcast has been 5 years ago, Zoltan.
Hi, Jamal. Hi, everyone.
Yeah, Zoltan is known for being a very good trader who lives from trading for a very long time. He also is one of the people who used funded trading like a long time ago, before we had this hype of prop firms and all that stuff. We're going to discuss these topics today. We also will look at some charts, some trades, all these things. So I'm very excited about it. And yeah, how are you feeling, Zoltan?
Well, good. Thank you very much. Had a nice hike in the morning, afternoon. So kind of just nice to enjoy the weekend.
Perfect. It's also good to do it on a Saturday. I feel when markets are closed, we all have a free mind. No, we are more more focused. Yeah, okay. I mean, what do you think? So, is your internet okay?
Was a little connection issue, I believe.
Okay. All right. Now it's better.
Okay.
What do you think, Sultan? Should we just jump into some trading stuff and then we just also take it a bit by ear, whatever topics you want to talk about?
Let's go by ear and let's see where the conversation goes.
Okay, I start with some forex stuff and then we get to your gold trade, because so what we're going to discuss today is a bit more advanced, which is nice because the first podcast was also about more basic things. So today with Sultan, we're going to go through some more advanced examples. Okay, so I will just, actually start. Let me share my screen. We need to move this away. Boom, boom, boom. Yeah, I think I'm going to start with this one, Zoltan. On the 20th of October, you see, I posted this one in the Discord. So that was a typical for our reversal trade. We had the market had cleared the upper band, the high. Then we had some dumb money buyers coming in. So, I said we can see a nice for reversal. So that's typically in our world what we like to see in the causality world. And yeah, it came all the way down. Everybody has been doing very well on this one. That has been a very good phase, but also, to be honest, a bit of an easy phase. Like when the market is like this and then, just crashes, we were riding it. We took profits at those stops here. So when the market is really aligned like that, that's really beautiful. But yeah, let's talk about your gold stuff, which is more advanced. Let me just go to the here to the charts which you sent to me. Here we are. Okay, take the stage, Sultan.
So personally, when it comes to gold, I think everybody noticed gold had lots of volatility, especially compared to forex. So it had, of course, run up to an all-time high, and then it's pushing to further all-time highs. And at some point, like every party, it comes to an end. Okay. So the tempers I give you, it's a little bit like just a simple chart to talk about. It's when the price starting to pull back, and then it's coming down. I highlighted there on the chart for you on this one and the next one, some of the run numbers, like 4,200, 4,100, 4,000, 3,009, right?
Yeah.
And basically that should be the light blue line. And then below where the turning point was, give or take with gold, typically, I think it's one of the things by observation you notice that it after it's coming down for the first time, especially to run numbers, it's tend to have like 5, 8, 10, $15 overshoots. Now we could classify it as we wish, that it can be stop hunt, it can be stop run, it can be just picking up liquidity. It doesn't really matter what is the story there.
Yeah.
But it's more important. It seemed to be a repeating pattern for me. Personally, I'm trading from a 1 minute chart, so this is a 15 for a better overview. If you switch to the next one, it's showing very similar things as well. So same thing happening there as well, right? The price comes down, basically goes below those run numbers and reverse back, right? So with the right timing, especially on the minute chart, these are tradable opportunities. Again, doesn't really matter that is a stop hunt or not. Personally, I believe that when you open a trading book or look at the general common knowledge, that is always set to place a stop loss around the run number, trade around some place like that, right? Anyways, we grew up in a school system when everything was in run numbers mostly. So everybody naturally tend to navigate toward those numbers. And
I think that's in human nature, no? Like people, they like to use round numbers as well, no? Like especially.
And then especially gold, it comes out very clearly that below the run number, you see each of those run numbers, there is like 4 of them between the two charts, about $15-ish overshoot, then pretty much straight away a turnaround. Now, this on a 1 minute chart is very well able to time. And I give you also an example there with MKWeb, where similar things can be actually used. So it is like an example where the price is coming down, sort of a stop zone, if you wish. On MKWeb, it's looking like some of the larger stop parts there, and then it's become taken. That's, I think it was like 39.50, something like that in between. And then I include there a mini chart that how it looks like that aftermath when the trade is being taken out. Then you see that the price is starting to reverse. So you could see on the 1 minute chart quite clearly when it comes to there that the drop is flattening out. The price is finding a bottom, and there is quite a nice reversal there. So I know when it particularly comes to MKWeb, most of the users are looking for specific mid-term, long-term stops and maybe option strike prices and such things to go toward. But this is a little bit more of the here and now opportunistic, maybe in a sense more advanced approach when you're actually looking for a larger stop cluster to be taken out, and then what the price is going to do aftermath.
Exactly. So to rephrase that, like you said, for example, here we see the option strike targets and the move down. These are the easier trades in the MKWeb, and like you said, exactly, this trade you show here is a more advanced one. So just to say that clearly, that's not for beginner traders. Okay, the beginners should just focus on MTS runs, on squeeze trades, and for hour reversals. This is really only for advanced people. So basically, what Zoltan is saying, and correct me if I'm wrong. So, for example, those short-term stops have been taken. You see, like this main target is a little far. So he traded after the short-term stop has been taken. He traded away from the even number as a scalp, right?
Right, it's correct. So in this case, especially with the current volatility of gold being on average nowadays moving 100, 120, 150, even more in a day. Sometimes even on a 1 minute chart, you finding yourself that you could aim for maybe a $5 to $10 chunk as a profit. These scalping trades are by no means intended that you're trying to ride for a whole turn. I'm not trying to predict what's going to happen days later. I'm looking for an opportunistic way, then a certain cluster, a larger cluster of stop taken out, especially for a level that is important, then potentially to get a quick pullback that can still pay pretty well for the effort.
Yeah, and maybe as a footnote, Zoltan, we can also get a bit again into the basket trading. I think in the last podcast years ago, we went more into detail, but just for the people to understand, right? So let's say that the price attacks the low again, you may definitely consider to buy again if nothing changed in terms of the prices, right?
That's correct. And also is important to add, that like it's again a little bit like referring back to the books, that typically the common notion that everybody trying to be that kind of sniper trader have a single entry, hit, bullseye, and profit. But when we're talking about, even when I highlighted those levels in blue, $4,000, $3,900, such things, they are really literally a very thin line on the chart. But when it comes to it, I would suggest anybody who is interested to not think about as this kind of lines as a line, but more like a zone.
Yeah, absolutely.
And just because the price goes $5 or $7 below the run number there, for example, or 12, that doesn't mean that the idea is invalid. One of the things we should also talk about the importance of tight stop losses, right?
Yes.
So another concept there. So just finish up with the basket a little bit. So basically, the idea that instead of targeting a thin line, target a zone, be able to cover that zone instead of fully committing on a single shot, potentially be able to consider that as long as that zone is intact and the things are basically playing out where you're expecting them, the idea is valid. So it just, I always, when I talk to my students, I always tell, think about it that checking out the temperature of the swimming pool or jumping head first in. It's a good way to test out first how the things are instead of being all in at the get-go. Maybe just decide that you get in gradually and not automatically thin just because one thin line is being punched, then the idea is invalid.
I absolutely agree. Our trading styles are actually quite similar, I realized, Zoltan, like, because look, I also do scaling, I rarely place everything in one go, sure, there are sometimes those sniper trades and stuff, but like this is rather the exception. Most of the time, if you want to go for a position trade, you scale. I even look at the 4-hour charts, and see what's going on, where I can place my stop overall and all of that. So, I think it's, our approaches are quite similar. Because think about it, right? By scaling, you actually also don't need to be super accurate with the entry. And that's a big advantage, isn't it?
Exactly. It's like, instead of really just, of course, when it comes to an entry, my goal is always that it can be as accurate as it can be. But definitely there is a plan that if I'm not going to be to the pip or to the 5 pip, to even to the 10 pip accurate, that doesn't mean that the trade is a bad idea or it doesn't work. Really, the market sometimes especially can just run over a certain level for being a larger order or getting that stops to be hit, like that chandelier type of stops when you cascade down for a certain part, basically end up having a large wick there instead. But in reality, especially as a small retail trader, we could get any size executed. Is not really a problem for us. We are not institutions. We're not trading usually in the hundreds of lots at a click. So it's not really a liquidity issue. It's just simply that that sometimes the timing is maybe a few pips too early. And to be honest, sometimes is maybe not even that, but I notice when I trade multiple brokers, right? Sometimes it's just simply the actual lows, the actual highs might differ quite a few pips between the brokers, depend, especially rollover times or high impact news times. You can notice if you look at charts, sometimes 15, 20 pips differences. Especially on the early times, they use that to kind of clean up their books, which is okay. I can understand their point as well. But I just meaning that, in a sense, there is no centralized price that exactly gonna be existing between all the forex brokers. So one of them, maybe you see that the price is say even for gold maybe $4,012, the other is $4,014. Which is wrong, which is right, doesn't really matter, right?
Absolutely. Yeah, so to summarize those 3 points you mentioned. So first of all, I agree, like if you use tight stop losses, most of the time you just will get stopped out. It doesn't make much sense, right? Of course, if your stop loss is too far away, then if you get stopped out, the impact of the loss is also over proportional. So it has to be some balance at least, right? But I really suggest everyone to use stops because as we know, there can always be a price shock or something crazy, right? Any second. So like you don't want to lose your shirt over it. So that's a very interesting topic. And the second thing you mentioned, the scalability. Yeah, exactly. Like for small accounts, there won't be scalability issues. You can put a lot of lots and click, and normally you get executed. For larger accounts, it's different, but that's not relevant for most people watching this. But there, it's very relevant if you do a click and how you get filled and which prices you get filled. So that imposes a whole other issue on your trading, but that's not so relevant. And the last thing you said, yeah, especially in forex, right? It's decentralized. Sometimes you see slight differences in broker prices, slight differences in the charts. So yeah, this is very real. And even when people who use automated systems, they should test them on different broker feeds, different price data, and the results will be quite different. We will be surprised.
Just a side note for the testing part, especially lots of the people do testing of ideas, especially and trading softwares, EAs, whatever, right? On demo account. Just want to add there a little fair warning that demo accounts usually run a little bit differently than live accounts. The data feeds usually have less of a quality, and you might end up trying to run, especially these expert advisors, some nasty surprises. Then there are holes in the data. Sometimes the spread is not really registered correctly when the rollover time. There are spread widening or large spikes or random large spikes. For this one, I just used to say that keep in mind that who is paying for the MetaTrader software what you're using. It is not the retail trader ultimately, so they're really there to please the ones who are their paying customers, and that's not you.
Absolutely. So yeah, it comes down to the fact that backtesting requires dictator variable spread, slippage simulation, all of these things. It's very complex. You're absolutely right, because these things that will change the result. Regarding what you said with regard to demo accounts, it's also true what you say. Normally, the execution is much better on the demo account. However, I want to stress, if you want to test whether your overall trading strategy or approach is profitable, you can really test that on a demo account. Sure, the execution will be a bit better than live maybe, but you know what I mean? Like that doesn't influence whether your strategy actually is profitable or not, right?
To be fair, I would say that as an initial test run, looking at the demo account, personally I prefer the live data things, but as a back test, a manual back test, I go through normally for my testing is I go through, like, let's say maybe random 2-3 random instruments, maybe for first 200 trades at random periods of time. Sometimes if it's past that one, then normally my next step is to go for a live account, a small live account, couple of $1,000, and let's see how forward that idea is holding up. And if it holds up for a couple of weeks, maybe okay, something where I can seriously do about something to go forward, right? It's very convenient to test EAs, expert advisors on demo, of course, but sometimes I find that in the past that the back test and the live forward test were not really compatible in the outcome.
Yeah, I always say, Zoltan, I also run an automated strategy and it does very well, but exactly like you say, it's not so. the first step was, and it took years to back test on different data feeds, then to forward test, like with live conditions. And now it's running. So that if you ask me, all these steps are needed, like you say. But to be honest, it's a very boring strategy. That's maybe 3-4 trades per month. You know what I mean? It's not a scalping strategy, and that's another topic.
One of the tough thing, yeah, if you wish, so just to elaborate that a little bit, one of the things with this thing in trading generally, higher time frame, lower time frame, when it comes to trades, is really like quality versus quantity. The problem is there that when you're looking for a lower time frame things, 1 minute, 5 minutes, you get enough instances, and generally the market as is changing. Let's say going through a 6 months period, or take for example gold. We were just talking about gold.
Yes.
If you look back, gold generally there's a very, very strong bull market or uptrend for the last 2 years. But if we go back a previous 2 years before that too, or a previous 2 years before that too, totally different outcome. So if you're running on a, let's say on the last 1 year or 2 year, you try to backtest on that data trend following system, probably gonna be a big winner. Try to do that 4 years ago or 5 years ago, and you get a totally different outcome for that one.
Absolutely. I think it's fair to say, as a general rule, I mean, also regarding all forex markets, your strategy should hold up over a good 15-20 years for sure, because then all the market phases are covered, right? Like you say,
Right.
you only backtest 2-3 years. It not only is it not enough, but most likely life it wouldn't work because the phase is changing again, isn't it?
Right, and because you have so few trades before you even know, if you take, let's say, 1 trade a week, that's 50 trade a year. It's 4-year period to get 200 sample, what I can actually find on myself maybe in a month or 2 months time. That's why when I am testing something, especially on a lower time frame, I always go for random periods. Try to choose a pair that I don't trade at all. Take, for example, like let's say I don't trade the Swiss franc pairs, right? Crosses. So I usually choose something like I don't trade. Then I choose a period that I cannot recall how the market was moving, because one of the side effect trading every day, that basically, for euro dollar or pound dollar or the major generally what you're trading, you can recall how was the last few weeks going generally, where the highs were, where the lows were, give or take, right? So you can have maybe some unconscious bias toward what you're trying to achieve, holding a little bit longer maybe some of the trades because you have the feeling that that the price was going higher, and then try to maybe even really subconsciously to try a little bit to curve it to the
that's why I wanted to ask you, Zoltan, when you mentioned before that for your manual trading you go back and you look at the last 200-300 trades. So in practice, how do you exactly do it, Zoltan? Do you load all the chart into your platform and you go back like scrolling?
I load back some random periods. So let's say we are in October now, but maybe I go back a year on a pair that I don't trade and look for let's say maybe not going back a year from today, but jump back a whole year, maybe to October a year ago for, let's say, Aussie dollar, Swiss franc, and then see how that was going that time. And it's 100% not going to be a pair that I trade, part of it because it's usually a low range pair, unless they have some of the high volatility things for the yen. But it's something I cannot relate to. So if my idea gonna pass on something that I normally is not my go-to instrument, and unrelated periods, then I pick another pair, go jump back 6 months. So it's something that is not reflecting just the current market flavor, but it goes for something different. So like I said, with gold, in the last 2 years, you could not really do bad. If you look for the US indices, generally since the COVID, it's an uptrend. Before the COVID, it was an uptrend. Depend, of course, your time frame, but when you look on the bigger picture, that since 2000, whatever, 9 or 10, it's an uptrend, right? Apart from that COVID period you take out, you could not really do bad. Same when people looking at crypto, particularly Bitcoin. Basically, you look back, it was up and up and up. Slightly different when you look for something like Dogecoin, which is at a quarter of its all-time high. But then again, that's a different instrument. But it's easy to overlook that one, that because Bitcoin is open up, that is likely to continue the same way. But we saw Bitcoin already falling in the past back like 50, 60, 70, 80%, which was only a pullback there. That would be an outright market crash anywhere else. But you know, so just basing on a more recent events or the last 1 to 3 years, it doesn't mean like with gold case, right? If you look back how it was in the 15 years ago or 10 years ago or 5 years ago, it was definitely not the same uptrend. Just because we get the price to double itself in the past 2 years, it doesn't mean that every 2 years or the next 2 years I expecting it to double.
I think that's a very important point, because we live in this world of short-term thinking, Zoltan, right? We see all these crazy guys on the internet who claim this and that. And when you take a close look, most of them, they maybe are active for a year and they haven't seen anything and they believe that's how this works. So, but the truth is what you said, when you zoom out and you go back in time, you see that these are all different phases, like whether it's the metals or whether it's forex pairs. It's like you say, a forex pair can trend for a year, right? So if you come and you use something which works in that market phase, then when the next market phase begins, you get smashed. And you know, that's what happens usually, right? And even if you do proper backtesting, as we mentioned before, and you take 15 years of tick data and you run your strategy through and stuff, even then you will realize that depending on each of those periods, whether the market was in ranging mode, trending mode, you will of course see a different result of your strategy. And I encourage everyone to approach testing that way, whether it's for an automated strategy, whether it's for manual, to really go through that and say, you know what, this has been the period, this worked from here to here, but now there's a different period. And obviously with the market causality, Zoltan, we try to overcome all that, because, you know, it doesn't really matter what, you know, whether we're in a trending market or ranging, you know, like the stops get taken anyway. So that's the beauty of it. But still, what you say is very true and relevant. Like even manually trading and looking at the causality and stuff, still you should have in mind, right? Look, are we still in the phase where the dollar gets stronger, like now, right? So when you trade into that overall big picture thing, it's easy to trade, like we showed at the beginning, right? With the euro dollar for our reversal down. Or are we in a choppy phase, right? And even with the causality, the choppy phases require different things, right? There you trade maybe more the you know, the MTS runs or post-stop hunt moves and that stuff, right? Whereas in the trending phase, with the squeeze, we call it the squeeze, you have to trade in the squeeze direction, isn't it? That makes all the difference.
I would like to add maybe one more thing there as well, you know, that when it comes to your market causality as well, and generally, you know, you're covering a dozen or more instruments, right? Different markets, forex, metals, right? So things are different there. Whereas you know, there is often the argument people run into, and it's really sound on the surface very well. They only one instrument, know it very well, and everything gonna be great just taking one single instrument. Personally, I am not really a believer that, take for example US dollar, Canadian dollar.
Yeah.
Used to be a tradable pair. Lately, US dollar, Canadian dollar is basically flat, dead, moving nothing. Whereas, for example, taking gold or taking US indices or taking maybe pound dollar or pound yen, they offer a lot more opportunity, right? That doesn't mean that USD CAD cannot pick up momentum. But right now, if you would rely on that one as your sole go-to pair, or would it be euro dollar? Some of the days US session is well underway, and then the daily range is 36 pips, right?
Exactly, yeah.
Let's just be fair that it's very hard to take from a 36 pip move out 38 pips. So
yeah, absolutely. And you know what you said, I'm the same, Zoltan. When some people say no, focus on one pair, I think it's better if you have many pairs, but then you're very selective with your trades, right? Because look at this, for example, Zoltan. This is euro yen on a day chart over weeks where short is coming in again and again and again. You see it went up, 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 right? So, for example, here's the action. You can get some easy pips there. So, like you say, rather focus on this compared to, let's say, dollar cut, where, like you say, the range was very tight in the last weeks here, right? Like very choppy.
Right, but in the same time, like with the other trends, you know, just to be ready that maybe that party with the going up and up and up is at some point probably going to end, right?
Sure.
So, you know, like in that case, you know, if you were looking that and then the bias to going higher maybe subside, then you can still, instead of the market probably going somewhat a sideways phase for a while,
yeah,
then you are ready to find your next go-to pair instead of waiting for this one to develop again, that maybe that trend will fade for you.
Exactly. So, you know, like here, euro yen, like you said, as soon as the shorties leave and this collapses, it can do a full reversal or, you know, go back and forth for a while. I agree. You know, why would you be obsessed with one pair when maybe in that time another pair does something interesting, right?
I used to call them, you know, when it pulls back from, for example, that chart, and that becoming that 50-50 coin toss phase when you really, it's up to your guess which way it's gonna go.
Yeah.
But I prefer not to guess the direction, but I prefer to, you know, in a poker analogy, see most of the cards already on the table so I can have a better understanding what my odds are. If my odds are 50-50%, I don't really want to trade that thing. I want to look for something that offers more, not a little bit, a lot more chances, a lot higher chances than 50-50. And luckily, we don't need to stick with one thing. So if it's, for example, my trading gravitated toward gold this year and from late last year, but I was just looking up some of my tradings and gold was not even representing 3 years ago, not even 5% of my total trading. So now often some month may be representing like 70%. Now, is it because I want to trade gold, or it is because gold is the one which is giving more opportunities? Of course, it's the latter. Gold is offering more opportunities.
100%. I mean, here we see the 4-hour chart. Look, it went up and up and up and up to the almost 4,400 all-time high, then did the double top. Then you see like this collapse here. Longies were killed, were leaving the market. Yeah,
Right, but even with your chart, for example, in the same time, it's clear that why anybody could look and say that was a strong uptrend. But even there, you see between the bands, you see that there was time and time again pullbacks there in the price move. So that is a lot more noticeable, of course, in a 1 minute time frame, like I'm scalping from, and you can get pretty accurate even if there is a very strong uptrend to short gold, because I mostly made my money when it was the up move on the short side.
Oh, really?
But yep, I'm not following trend. I'm going against them, so-called trend, because of course on one time frame maybe it seems like one way, the other time frame seems like another.
Yeah.
But here you can also notice all that reactions for the around the top of the band, right? So pretty much regularly you could say, okay, at those points, if this is the market reaction, it is almost becoming like a habit, then you can look for those things zoom down on a lower time frame and see what's happening there and see if there is something repeatable, similar like it's the price taking out the run numbers when I was highlighting when the thing's falling, right? That is the same pattern there going the other way upward as well. Now, of course, gold was a little bit tricky in one sense that it was an all-time high and continued to push an all-time high where really nobody trading on the other side and everybody on the long side is in profit. So anybody who bought any time in history was in profit.
Sure. Now it looks exactly like what you said earlier. It looks like it's now ranging though, isn't it?
It is. The only good exception here in gold, that if it's making a daily range of say $80 to range, that's still 2%.
Sure.
Whereas whereas euro dollar is having a 50 pip days, that is only like 0.4%. So 2% versus 0.4, which one is gonna give you the volatility to give you some quick profit or a decent profit? I would say the one which is having larger ranges, right?
Right, right. And let's also talk about the nasty case, Zoltan. What happens if, you know, you entered here and the thing runs against you, and then you did another trade with the basket and so on and so on? Of course, you have a stop rule, no? Like if there's a certain amount.
I still suggesting, you know, for my students as well, you know, that generally, of course, you know, it comes down to your risk appetite, right? Positions can be smaller, can be bigger. When you trade a very tiny account, you have no choice. However, you cannot go lower than 0.01 lots. So if you're really trading that little, then it doesn't give you much choice. However, protecting your equity to live another day, that's important for especially when you trade like a basket like approach. The best thing is to do, in my opinion, is to use an equity based stop loss. I think I mentioned that last time as well in the podcast. I still stand behind that method. Use an equity based stop loss, so you have actually the freedom to size your trades, enter where you wish, but still keep your equity what you intending to keep. Sometimes the price won't do what you're planning it to do. Doesn't matter the probabilities, doesn't matter the chances. Not every time the market reacts for whatever reason that is expected, right?
Exactly. Like it's gonna always happen. So let's say, you know, you went short, and then the thing runs away. So basically you would say, let's say, you know, if it's drawing you down 10%, you just close the basket, yeah?
That would be the best thing to do. Basically, if you look and a little bit to touch on the next topic, if you look for some of this prop trading type of environment, usually they not put you much a restriction also how you trade. Matter of fact, I believe, again, institutions are also not gonna do a one-click 10,000 lots and that's it. They're gonna scale into a position, different points. They're gonna scale out in the positions from different points. Works for them, should work for you as well. Maybe in a faster environment, because I don't need to look for daily charts. I can look for a 1 minute chart, a 5 minute chart, whatever chart to do the same thing, but the logic is the same. They can do also in an equity-based stop loss. You can deal also with an equity-based stop loss that takes out the immediate focus from having every entry as a sniper entry. In the same time, it kind of define you before you start to trade. You define generally about how much you're looking to risk, how much you're looking to lose, and then you have a number in your head, be that $100 for the day or 500 or 1,000 or whatever, based on your equity, based on your expectations, based on your risk appetite, because of course, more risk you take, likely the more profit you can also collect. If you do very defensively the trading, then sometimes the whole risk taking is losing the meaning, right?
Absolutely. And to put it a bit into perspective, I think in the last podcast we talked about it. I mean, you have managed to sometimes make like 100% a year, and then if you have a 10% month drawdown, you know, in the perspective of things, that's not very relevant. But one thing which is really important for people to understand that as well. Let's say you get hit with that, then obviously your risk management for the next period is also very discretionary. So you will carefully work your way in it again, right? This is very important to understand, because, you know, some people think, oh, I can do that too. No, not necessarily, because like this kind of thing only works if even in that difficult period, because you don't want to be hit again with another 10%, is it?
No, this is usually how it goes. If I take for example, last year was not a good example, but an example for this one, right? The very last day, FOMC day, that was my last trading day because my brother was flying in. I know that in Thai time, 1 a.m. was FOMC, 3 a.m. I had to go to the airport. And I was talking to some students and we said, okay, let's do one final trading session for the day, for the year, last trading day. And then I went a little bit heavy also on euro dollar, and it started to be against me. And I was up in a month like 4 or 5%, and the year was beautiful, just sitting above 100. And then I was thinking that, okay, brother gonna come, I'm gonna have some extra expenses, let's push for it. And then the time was starting to run out, so I had to get in the car. You know, when you're running multiple accounts, you cannot trade that in a telephone. You cannot really hope and leave open to things. And I was down quite a few percent, so ended up the year to go from a +5 to a -5. But basically, grind my teeth. I said, okay, I'm gonna close this. I don't like to leave the trade open. It can go either way. I had the feeling that probably I'm gonna be making money on it, but I'm gonna be super busy to do this one. I don't like to stay up the next morning. I don't like to leave a large position open overnight. So I ended up taking a loss there, ended up December with a -5%. Not a good feel. My year was still like 95%, so I could not really feel bad about it.
Yeah.
I could only feel bad about me messing up the very last trading day of the whole year, basically. But yes, things happen sometimes. It was also a little bit because I went heavier than I should. Maybe I should also ignore that I normally tell, if you don't have the time ahead and you need to go somewhere,
Yeah.
usually that is a bad time because you're already starting under pressure.
Yes.
Trading itself at times can give you some pressure already by the nature of trading because you're risking money. If you're already starting from that losing position when you are already know that you're not gonna have the time to stay too long, or you went too hard or something, you know, it's still, taking a loss is not good, but sometimes that's the best thing to do.
Yes, absolutely.
Especially if it comes back to even a trade, you know, when you use a basket as well, often is the case that maybe in the mind we want to take the best out, which is profit, right?
Yeah.
And sometimes you get what I call that window of opportunity. When the price pulls back, maybe I am still seeing myself with 1% negative instead of, I was there also, right? And then I chose, okay, just a little bit more, a few more pips, and I am back to my position. And then it start to drop back, and then it can go for a roller coaster for a while.
Yes.
Sometimes it's, you know, when I look at the chart, and I see that how it looks now, it would not be a point that I want to take the trade now.
Yeah.
Then it probably is a good indication that it's better to get out, regroup, and then you can recover.
Absolutely. Like, you know, in my approach, like people know now that my hit rate is very good, right? If I have high conviction, high confidence trade ideas, they work out most of the time, but not 100%. So that means if there's like for example, there's a dumb money switch, yeah, and for some reason the dumb money completely leaves and goes on the other side, then, you know, like you said before, the trade is not valid anymore. So you have to have the discipline to cut it. It hurts, but, you know, like you can't say, oh, maybe it will still turn around. No, you know, this can completely develop into a squeeze and run away and not come back for 2 years. So one has to take the losses and then, you know, take the hit. And if you don't, if you try to hope and hold, then you're going to blow the account. I think it's necessary in this business to be ice cold with that. And I know it's not always easy, right? And like you said, also, like, circumstances, they do influence us. Like I had a similar situation last December, you know, around the Christmas time, and, you know, like, oh, you know, it's when, you know, you have to be somewhere and stuff, and then you also actually are focused on the market. That's never a good combination, is it?
Been there, done that, when somebody waiting for you to go out because you know what time you're gonna be there for dinner, or are we going to shopping, or, you know, it's sometimes, you know, how long, I don't know, I cannot really tell even for a scalp trade. Sometimes it's 20 seconds, sometimes it's 20 minutes. So it is hard. But when you are there and somebody you know that waiting for you, and then you get that extra side pressure. That's not really a good thing.
Zoltan, I was very honest. Look, I was together with an amazing woman for like 7.5 years, but that was a factor also which put pressure on the relationship, right? Like sometimes getting alerts at night, not being able to say, and she was rightfully saying, like, look, it's difficult to get you to come on a holiday. I was like, yeah, because then I'm not on my desk and stuff. And look, let's be real about it, right? I mean, you have done a great job in managing your life around that. And I try to manage my life around it as well, but it's sometimes not easy. The reality, let's be honest, right?
Inevitable, sometimes we get into that. I also sometimes tell my girlfriend the same thing. It's easy for her because she can manage maybe remotely her business as well. If I am not at trading, then basically you don't have the income. Sometimes it's like that. And in the same time, let's say maybe we make an arrangement. Okay, we're gonna go eat dinner, right? For me, doesn't really matter when you're trading. Food is not the priority, right? Matter of fact, I'm thinking of the trading going to pay for that dinner, but I believe you've been to that situation when maybe I even find myself once in a while, which is not a good thing, but sometimes I look at my daily profit and loss. I am up ahead. And then I say, okay, now my trade is a little bit of negative. And I just take a little bit of loss just to keep the peace, to go out for the dinner. Happens sometimes. It's not a good decision.
Well, but let's be honest, Zoltan, like that's a reality, right? Like, we are still humans, we still have a life. If something goes out of balance, let's say we stop working out or we start, doing things which are not good for us, it will of course impact us. If we have a fight with somebody, of course we don't have the same mindset as if we are at peace, right? These are all the realities, and every trader knows that, right? You have to manage that, and like you say, sometimes it's ups.
Sometimes you have to think of the others, like I know she's waiting for me down in the car, and then how long is take? Well, I don't know, 2 minutes, 20 minutes. Half an hour later you say, okay, well, I should really go now, but it's not easy to leave. I personally don't like to leave trades open, so sometimes it's like a little bit juggling also to keep the non-trading balance in life, right? But and for the stop loss, the equity loss, and taking a loss, I would like to add, I have one hard rule for that one, that once I taking a larger loss, so a percent wise, I always have that rule to have a full day at least, that I turn off the computer. I don't want to think about, of course you're gonna think about trading, but I like to cut out even the slightest chance of coming back and try to revenge trade.
Yes.
It's not the right way also, that if you take a loss to raise the position sizes. Normally what I do when I start to come back to trading, I cut the position sizes. It's kind of a little bit like a getting back on the horse type of thing, but I most of the time start every week like that, put a smaller trade or two, see, okay, I came back from the weekend, I still can do this, so let's go. And as the day develops, I start to raise my position size to a normal as the trading ranges are getting better and so on. But I always start out lighter, and especially when after a loss, it's contrary to double up the size and then let's recover quickly. I usually lower down the position size. I find then once I am seeing that I am still in a good sync with the market and I'm really getting, especially after a loss, often that you feel that your focus is really the best. Because when things are going great, it's easy to get a little bit sloppy, yes? So it's like, you feel like, okay, I am doing this great. Okay, this is easy. And
you know what? This is very deep. For me, this is even spiritual. That's very interesting what you say. I agree. Like, when it goes against you and stuff, or you have to work out of a drawdown, you're really there. You're really in the present, right? You're really on top of things. but you know, if you're writing something and it goes really well, you're like, getting a bit forex.
You know, you start to think then, okay, I can make this. This is good enough already. I can make some money on this. I can make some money on that. Things coming sometimes a little bit easy.
Yeah.
I find from my past, unfortunate, that some of my biggest losses or some of my stop outs came right after the best months.
It's
Like
always,
I like to get to the end of the month. I had a high flying month making say 10%, and the next 1 day or 2 day, the first 2 day of the month, I still, you know, not noticing that maybe it's a new month, new day, new week, and then, you know, you get into something that the things change.
Absolutely. I feel it's almost like a natural rhythm, no, to the game. Like it's as if there is like those phases where there's easy money, and then there are those phases who are complex. And I always try to go with it as much as I can, you know. Like look, for example, now with the dollar pairs and forex, we had such an easy period, right? You could just sell the dollar pairs and collect pips. Now we know that, you know, the next 4 or 5 weeks, as soon as things start to reverse and stuff, we're going to have a rangy period. So, you know, I always try to not lose much in those periods because, you know, you don't want to give back what you made. And what you said before is very interesting as well, Zoltan, those little rituals. I think that's very important for any manual trader. You need to have your little rituals, right? Whether it's like first trading small into the week. You know, I'm very extreme these days, Zoltan. For example, when I know that there are days where there was going to be moves and I can make pips, then I'm on there. But when I know that there are just, you know, like rangy days, like a Monday, often a Monday, right? It's like rangy and there's no volume, there's nothing. I try to not waste my energy and screen time on it. You know what I mean? And I'm saying like, you know what? I'm going to go to the gym now because then I feel better tomorrow because, you know, like the market is just daddling around. I'm rather there when there are the big moves and I need to catch them, you know? And I try to also do that zooming out, like in terms of, okay, this is a very interesting market period. There's going to be pips to be made. Or, you know, this is like rangy stuff. And like you say, like, you know, the markets are just, you know, like not really going anywhere, a lot of flat periods. I think it's needed.
Especially, you know, like, I think it's also important, you know, to understand a little bit your own personal nature, what suit you. Take, for example, like when I used to work at the cruise line still, of course, then I didn't have access that much for internet. So I was trading, but mostly swing trading, kind of like from the hourly chart, you know, opening something maybe in the morning, check back in the evening after work, how is it doing, and such. And frankly, I could be still profitable with it, but it didn't go well with me. I prefer to be in and out of the trades. I don't like to go to bed having open positions, for example. Some people happy to hold trades for weeks.
Yeah,
and some people
to be honest, Sultan, I have moved a bit more into that direction because I realized like the big money is also for the moves which you can write. You know, you can maybe protect yourself, but you try to rewrite them. That's where the money is. You know what I mean? Like I learned in my personal case, Sultan, because I used to be like a short-term scalper, right? I used to really go to minute charts, but to be honest, I do better like zooming out, right, and looking for the real good stuff. To be honest, like being selective. And you know, like I actually adjusted my life to that, to be honest. You know, that's the reason why I also started this project and stuff to work on other things, you know, rather than clicking the button all the time.
that is totally fine, you know, but that's what I mean. Like maybe, you know, different people have different nature. So personally, I know that if I go to bed and I have a larger position open, that I might be waking up in the middle of the night just to check the price on the phone or something.
Yeah.
How is it going? Should I do something to adjust there? And sort of, you know, one of my favorite thing, you know, for this one is basically the how do you eat an elephant type of thing, right? So it's basically one bite at a time. So scalping is that one bite at a time. I not to try to be too greedy, take on too much at the time. However, for me, I am my approach, my mindset is like that I can, for certain conditions, I can predict a lot higher probability the near future than the far distant future.
Sure.
I normally accept that that I don't have a better information flow than some of the big players. So I cannot really have advantage in that one to holding on their time frame or trying to play on their field. But I can create something where they cannot really touch me. For a large bank, doesn't matter what people believe, a small retail trader at a B book or hybrid book environment is nothing.
Relevant.
And even these B book traders or retail brokers, not traders, brokers, did evolve. You know that if you recall, about 10 years ago, it was still like last look and the execution delay and such things. Now, basically everything is automated. So you click through your 1 lot, 2 lot, 5 lot, 10 lot. On the majors, it's gonna go through without any issue.
Yeah.
And your retail broker doesn't give a second thought about what you're doing, right?
Yeah, I mean, I would agree generally with the statement. I mean, the topic of broker manipulation, what they do sometimes is the spread. You know, they change the spread, and somebody who has a tight stop, they may change the spread and take them out, right? But
but even for those sort of things are going on more on the minor crosses.
Absolutely, yeah. And also just to clarify, it's not that they are going for your particular stop. It's just that they are just
that just their own risk engine or their own trading desk that basically adjusting their own exposure to this one, right? So it's not really, they're not particularly after me. I can still execute often a trade that maybe last even really seconds, sometimes like 10 seconds or 15 seconds. And that is something that no institution can ever gonna be able to do. So that's not gonna be the playing field for them. In the same time,
absolutely. I mean, maybe to summarize that, because it's an important point you're making. That means, like, as a non-institutional trader, you can make your trades without attracting any attention or being hunted. But when you trade big accounts, then that's a big topic. You know, they're gonna take a run on you. But you know, like,
yes, exactly. So at this point, you know, you're not really cost that much to the broker. Your trade is just one under a lot of others in the similar condition. And of course, even if some of my scalping trades are ending seconds, that's not really my intention.
Yeah.
I am just as happy if it's ends in 5 minutes than if it ends in 15 seconds. But just generally the ability that it might be lasting for a short time, that is something what is granted only for the retail traders in this environment. And then you can really have that tight spread what you see at your broker, the 0 pip spread and such, you know, advertised. Of course, is a thin top of the book 0 spread, but in the same time, that's never exist in an interbank scenario. There is no 0 spread. People lean to believe that such things exist, but they don't. Just
that's a good point to talk about the whole topic of prop firms, Zoltan. No, like, because I mean, these are very interesting aspects. But how does it work if now you go to an environment where many trades are not even executed, and you know, some are completely simple?
You know, with the prop firms is a little bit tricky topic. They have very few actually that you can get in from a retail type of environment, which is the so-called classic prop firm type of things, when it's really merit based. In a sense, most of the prop firms, what the people familiar with it, what I categorize as a pay to play. So you basically buy a challenge type of environment for yourself, which you kind of almost encourage to gamble until the point when they are funding you supposedly with the imaginary funds, when you are actually discouraged from gambling, so you cannot do the same things. Generally the same thing is common with this pay to plays as well, that you get a relative tight stop loss. So again, right, if the tight stop loss, like it sounds great as a book idea. It sounds great on paper, but once you're starting to use really tight stop losses, you're gonna hit them too often, and then it's gonna bleed you slowly or quickly to death. Or
I mean, that would be easy, right? If you could just use tight stops and your risk reward is great, even if you get stopped out, but then you hit some big things. I mean, I've actually made a long time ago a video dedicated to that topic. Of course, they don't let that happen, right? Like that's not how this game works. Like, and anyone who claims something different doesn't know or didn't really do it.
Most of the time, also with most of the system, basically, if there is a system at all, you're expecting, okay, let's say 3-to-1 reward to risk ratio sounds great, right? But what makes you think that you're gonna have the 3 times reward?
Exactly, exactly. It may come in reverse.
And be that stop loss a 10 pip or be that stop loss a 30 pip, you still expect on top of that the 3 times more, right?
Yeah.
Okay, maybe it works sometimes, but it's gonna work a lot less often when you're looking for a larger stop loss.
You know, that reminds me of all these ICT guys, you know, Zoltan, these inner circle guys. They have their setups and they say, oh, you know, this is, I don't know, Judas swing, or they give it these fancy names. They have a really tight stop and they expect liquidity to be grabbed and that stuff. And, you know, it's exactly the problem, like you said. It's like a nice story to
you know, for that one, I remember somebody was pitching that liquidity gap, fair value gap type of scenario on a Aussie dollar, US dollar example, where the whole fair value gap pips to grab was about 2 pips. So it's like, I said, did you come to think that maybe if your execution is not spot on, plus you pay the spread and commission you're paying, that basically you have about big nothing to make on that. So it's like, you know, why some of the things looks fantastic on a chart when you're marking them up. The reality is that that on a non-charting, they're not gonna work the same.
Exactly, you know, and there's been such a big, like a new generation of young traders who are all talking about that stuff. And, you know, like they have been very quiet recently because the market conditions changed and all those setups stopped working and nobody doesn't want to admit it, right? Just because they like the story behind it. No, honestly, like that stuff.
It's a little bit same with the old books. You know, I really love take for example the Market Wizard books. I really love to read them.
Yeah.
But we have to add in that when a Paul Tudor Jones was making to that book and making 5 years back-to-back 100% return, that was the only 5 years when he ever made that back-to-back 100% return. Never before, never after, because what was the underlying market doing? Basically, those were the white times when you could throw a darts on the stocks, and then you could still make a profit, big profit, with just picking whatever you were picking, right?
Yeah, and you know, just to back that up, what you said, there's a very interesting movie where I think from the 80s where he was filmed trading, Paul Tudor Jones, and you know they printed out this Elliott wave chart, you know, they were doing like short trades on the index on that, and like you say, these things used to work, but they are over long ago.
So the other thing for you were asking about the props, you know, one of the things that you can also see that basically, you know, they kind of changing, some of them changing a little bit the rules once you already passing the things. Second, you know, at least the time limit went away from them. Now, basically, you know, initially it was like a ticking time bomb. You had to make 10% in a 1 month, then you had to make 5% in a second. Like if you're not making 10% a month, then you are suddenly not a good enough trader. But then they were pitching you the idea that they're looking for conservative, consistent trading. Let's just say
exactly.
that.
Like to be exactly that's a contradiction. But to be honest, you know, Zoltan, I was recently approached by some prop firms, and I actually said exactly what you said, and some of them are willing to actually create custom programs where there's no time limit, you know, where you don't have to make a certain return. So, you know, like I like that. I'm not generally against that stuff. I see also the merit of it if you take it like a game, right? Like you said,
But you know, if you take it as a game, in the end of the day, it's becoming more like a gambling. It's like you just buy a lot of lottery tickets, some of them are scratch cards,
Yes.
some of them gonna win. Maybe you are the lucky one. If you have deep enough pocket to have a lot of the scratch cards, then maybe you have a better chance to be the lucky one. But you know, part of it that you also see some of them don't really last, because end of the day, you know, simulated money doesn't gonna generate real money to pay out, right? You know, one of the claim was for them that some of the trades they forward to the live market, the real market. And if they have I always said, if they have a risk manager who can decide which trader to trade for live, which trader not to trade for live, then you don't need traders. You need that risk manager to manage the firm's funds, right?
Absolutely. I mean, like, you know, I mean, I don't want to put all of them into one pot. Like, we have seen some horrible prop firms like this, my forex funds, who got taken to court and stuff because they were literally putting the winning traders on bad trading books and that stuff. But you know, there seem to be some other firms which have better practices. You know, like it's a little bit also like the retail brokers back in the days, right? The bucket shops, when they had the dealing desk, they were also trading against clients. We're a bit in that phase, right? There's consolidation, and maybe in the end, some good.
I am aware only for basically two of the different models in the moment, which is not running this pay-to-play type of prop environment. Generally, one of them would be Darwinex. That is, you know, basically a brokerage is behind, so they really have their own ecosystem for that.
Yeah, we have a partnership program with them, actually. That's the only one we have at the moment, yeah.
Now you have multiple options there to pay like monthly fee or such things, and then the only problem there that why they might give you funding of 30,000, 60,000, whatever thousand euros, eventually the payout is relatively low. Again, relative, I'm saying in comparison to the other fake prop type of things.
Sure.
Often they offering you up to 100% your performance.
Exactly. You know, like that's like, look, what I liked about Darwinex is they think on the long term. Like, you know, they have a pot of actual funds and they're distributed among traders. But like you say, it's more long term. You have to stick with it over a while. These other prop firms, the very short term focused ones, which are really like popular at the moment. Yeah, I mean, they win because most traders lose money, right? But so that as such is a known fact, right? But you know, then again, there's also the whole management aspect. Some firms try to avoid payouts, or they suddenly change the rules, right? That's what we have been seeing recently a lot. They suddenly change the rules, they don't pay people out, or they're really badly managed.
That can happen. So one of the things with Darwinex, you know, that of course the 15% profit you're getting, that used to be quarterly. I think now they can pay monthly potentially. I think I'm not 100% sure. I'm not using them. So that's fairly okay when you come to think of general industry as a profit share. I know it seems for a lot of people low, but that's how it is. You know, nobody gonna give you take all the risk and you're getting 80% of the, or 90% or 100% the profit. Nobody gonna give you that money, right? The only problem with Darwinex, what I see is that are they also running that risk engine as well? So you might scaling up maybe not really proportionately to your profit, what you think you're making, and you don't really see for real what is their expectations are there to actually be okay. And if you're making something what again controversial, let's say 2% a month, which is, you could say low end, but I don't want to say low end. That's not really that bad to make 2% a month.
Yeah.
But if you have, say, $100,000 funding, that's you making $2,000. Okay, that's fantastic, but you're only getting 300 out of that one.
Yeah.
And that doesn't gonna make you a living. That doesn't really gonna do much for you, right? And when you see Darwinex also running probably 10 plus years already, if you see they have some of the accounts which may be up for 10 million or such for funding. However, you notice there that most of those accounts are are not really performing fantastic, especially lately. They're not really making a lot of money. When you come to think of that one, that the performance is what they're showing on these accounts are before the performance fees, not after the performance fees, then you, as an investor, it's really not offering that much.
Yeah, I mean, you know, also what's interesting, what you mentioned before with like people taking like all kinds of prop firm challenges until one hits. This other trader who was really popular, who claimed he was the best FTMO trader, the German guy, Bernd something. He was recently also exposed for these kind of things, you know, like apparently their performance has been really bad in the last month. But then, you know, when you see all those claims, it's like, oh, he won FTMO several times. And, you know, like it's very disappointing, but most of the time there's something dodgy, which you find in the end, or, you know, like it's like the prop firm trying to do marketing or, you know, trying to show good examples of people. So, you know what I mean? I'm very skeptical generally. Yeah.
You mentioned, for example, FTMO. In the recent newsletter, FTMO, for example, were using a demo account as a showcasing their good trading behavior for somebody. I mean, you know, where are your highly funded $200,000 funded or $400,000 funded traders? Are they not making impressive enough money? You know, that's always leave you the question, why you leading your newsletter to show a demo account?
I guess, you know, like there are some guys who are doing well and then who get funded and who also get payouts, but obviously then it changes again, isn't it? That's, I think, what it is, right? Like somebody may be doing well, having a certain strategy, like we discussed at the beginning, but then, you know, like market conditions change, they have a statistical system which then stops working or doesn't perform as much as it did or whatever. You know what I mean? And then they will lose the challenge, no?
Plus the other thing they forget to add, you know, that comes out, of course, stories often, like FTMO, for example. If you're doing well, they might change the rules on you.
Yeah.
Now you limited how many challenge you can buy. Now you limited that you can make only risk 1% per trade or such. Basically, it's equals to having a very tight stop loss, which...
Yeah, you know, you have to close trades 10 minutes before the news and, you know, on a Friday and, you know, like there's suddenly all these conditions.
It's all of that basically all of these rules are there for a reason, that definitely not to make you make more money.
No, exactly. Look, that's the reality, right? I think they would even challenge that, right? I mean, look, and you know what's so interesting, Zoltan? Look, without all those conditions, trading was already so difficult and 90% of people lose, right? So now you add those conditions and it's gonna be even more extreme.
Exactly. You know, one of my favorite saying, you know, that when you open, you know, in Europe, the brokers have to disclose how many % of the accounts lose. So if you look, most of them on average about 80% of the accounts losing. One of my favorite to say, to look it up and say, basically you want to be on the 20% who is not losing money, just don't place a trade. You already beating it. You already beat the 80%. So if that's the goal,
it's true, isn't it?
You know, you can get around that. You are on the top 20% by doing nothing. So
yeah, but it's true, and it's good to remember that, you know, these are the hard facts, and one has to be humble to say, you know, I'm able to beat that. But you have been always humble. You have been very, you know, straightforward, very transparent, and maybe let's take a step back, Sultan. Let's look a bit at your path, because I remember already maybe 8 years ago, you know, you started to do some funded trading and you were always in negotiation.
me personally, I went, you know, that I was working at the cruise lines at that time, so I was trading for quite a few years, you know, a little bit mixed success, but I started to find maybe 2015, 2016, more of that consistency that I was building on. And then in 2017, came up the opportunity that at the time there was a firm called Psychvision was looking for funding traders, and then you could basically, that was a different prop approach at the time, That's alternative to these pay-to-play things. Basically, what you could do is to attach 6 to 12 months history to show that you are consistent over a 6 to 12
remember,
months history. And then if you could show some good history, and then going forward, you could kind of keep up with that one, give or take, then you would have a chance the door to open. So I was basically in the first batch of 5, I was generally the first trader who get funded by them. At the time, I think was maybe 50,000, and then became 100, 150, and that until, and then Axie bought out them, the brokerage Axie, and then they became Axie Select. So that one in that stage is lasted until end of 2022. And by that time, I had like a $500,000 funded account with them. So that was a decent one with a pretty good drawdown rules that they give you, basically a open 10% drawdown rule. So you could actually have the freedom to trade and make something out of it. The profit share, of course, was nothing like you see in this pay-to-plays. Basically, it was 20% of the profit quarterly paid, but that was fair enough.
Yeah.
On alternative, I get funded by a prop firm that time that was just coming from the institutional place. They were also a brokerage that named Fixie, and they were offering $250,000, also merit-based, totally just by recommendation, and seeing your 1 year plus live track record on a. They were actually asking also that to be on a decent size account, so at least like a 5-digit $10,000+ account. So that's showing that you not just get lucky, and you are also somewhat committed to this one. So it was not just pure gambling on a small account. And then I get like 250K. They had a slightly better conditions on the performance. They were offering 25% performance fee quarterly as well. So everything was quarterly. DarwinX was that time quarterly as well with the 15. So this was better. But what the difference was, they were only looking for about a 3% maximum drawdown. So it was tight drawdown. You had to size down the positions, but they were happy if you make about 1 to 2% a month. That was also plenty enough.
But does it mean like you can have 3% open drawdown or closed?
3% open drawdown maximum.
Okay, so you can't like.
So basically that was trailing you, kind of.
Yeah, exactly. Yeah, trailing. Yeah.
Basically, it's trailing you. So if you close everything the other day, then the 3%, that was the target at least. So I was doing okay with them because after the first 6-month period or so, I get up the funding for 1.25 million. So they went about 5 times larger, which was still is a lot of money to manage. Only it was unfortunate that they decided just a short period after that retail place is not for them, and they left the funding program as well as all the retail things behind them. So that was one of my lessons. I learned that pretty early, because I left my cruise ship job that was at, as a calculable income to jump into full-time trading. I had some of my own funding as well. And then I was relying in this type of deals as well to make some income. And that was like an early lesson for me. And that still holds to this day, that end of the day, you can only rely 100% on what is your own funding.
Because you know what, Sultan, I couldn't agree more. I had similar experiences in the last years, and absolutely, exactly. Like you can never assume that things are gonna stay as they are, or that it's all gonna just be linear, and like in the end, there's always black swans, there's always changes, right? And also you wonder, right? Like for example, these people, I mean, come on, you know, they saw your whole approach, right? They saw like how you manage the risk. They saw what you do in down month. You know what I mean? It feels like there are not many reasons to be scared. You know what I mean? Like, I remember once I talked to this broker, and they also had a funded trader, and he would have a very good strategy, but on a regular basis, he would have 20% drawdowns. And every time they got really scared, you know, when he had a drawdown. But eventually, he always came back up. You know what I mean? Like, yeah.
So it's a little bit tough, but then, you know, so basically the own fund of yours that you can rely on, even if you have some losses and some dips, you can fall back on that one, you can calculate on that one, you can withdraw from that one, you can take a little bit larger risk if you wish on that one, and you know, overall you are able to do what you think is the best for you. Yes, sometimes this trading is like that, you know, sometimes maybe the price goes a little bit further than you want. Sometimes maybe you get a little bit more into drawdown than you originally planned. But it's a decision we have to make, right?
But it's so impressive, Sultan, that you managed to live from that for such a long time, you know, despite all that stuff happening. Honestly, you know, you are one in 10,000 people or more, you know, like, who made that work. And
It's, you know, it's definitely everybody's idea, but it's not really, you know, even myself, to be honest, you know, you feel continuously when you come, especially not from a trading background, no big funding behind you, no big connections or family money behind you.
Yeah.
I grew up, you know, in a communism still, so with a regular working class parents, so it was definitely not have that tailwind to help you out, right?
You know what?
And
Sorry to interrupt you. This is really important, and that is the reality of life. You know what I mean? People look up, let's say, Bill Ackman, and he says, "Yeah, you know, I was broke when I was 30." The truth is, you know, like, if you're a part of a rich family and you have all the rich families around you, to raise, you know, a few million is very, very easy. For the average person, that's not easy. And thank you for saying that. And I want to say and admit, it was also a learning curve for me, like, where you live, you know, whom you know, like, everything in life is a big factor. Sorry to interrupt.
you know, Jamal, I used to, when we're talking about risk with students, I used to tell them the example of Warren Buffett, right? That I always tell, if Warren Buffett lose 99.9% his money, he gonna be down for his last $200 million. So he gonna be really poor.
Yeah.
Now, I always ask, what happens if you, retail trader, a little guy, aspiring full-time trader, whatever, lose 99.9% of your money? Where you gonna go?
Yes.
Where you gonna have enough to live on? So we are not in the same scenario.
Oh.
Don't compare to those people, because
Yes.
you know, they can lose whatever, all of the money. Even if they lose 100% of the money, they're gonna get a book deal to write for $10 million.
Yes.
What was the story of it?
No, honestly,
Yeah.
like that's very important. You know, I want to really stress that. Like, you know, like, some guys in New York City, right, who are surrounded by 50 real estate developers and, you know, 50 venture capitalists and 50 bankers. You know what I mean? Like, for them in their networks to, even after failure, to come back, like many did, right? Ray Dalio, Bill Ackman. And I don't want to take anything away from them. It's still impressive to come back from those lows. However, I like to put things into perspective, like, exactly like you say, for the average person, like, that can be the end. Yeah.
You know, like, take for example, like, I will start, you know, telling that Psych Vision, then Axis Select story, right? I still do trade with Axis Select as well, but they changed the rules after 2022. They went on, they drew up a new system, which is still a very viable things. And let's say, but that one day you had $500,000 funded account, and the next day you don't know for how long you don't have that account.
Yes.
Things can come, things can go. So, for example, in Axis Select case, they came back out in basically the next September in 2023, 2 years ago, right? With a new set of rules, and you had to start from zero. Everybody had to start from zero. Even if you've been the pro trader, you had to start from zero, right? And then what you would do for that 9 months if you rely on that income?
Exactly.
Nothing, right? Then maybe for a year later you could maybe scale up for the same level. If you can scale up for the same level, of course, rules change. At least that's still somewhat a merit-based approach, right? So you can trade your own account, and if you hit certain % of profit, you can get to more funding. But you know, when it comes to sort of scoring a trading style, or it's come down a little bit preferences, right? You might not be scored for whatever reason the same high. Then when just absolute term, you need to make profit, right? It's a lot easier to fit between a profit expectation and the drawdown expectation than fit into some other set of black box rule, right?
Yeah.
So they're really practical, they're really good, they pay higher % profit, but can I rely 100% on the being funded by Axis Select? I cannot, right?
No.
So, and even if I scale myself up, which I did many times there, say, for example, for $100,000 funding account, that's a great way to leverage your 4,000 master account, what you need there. So you're getting basically 25 times more funding, you're getting basically 50% of that profit. Is same like your funding goes $4,000 worth $50,000, 54,000 basically, right?
Yeah.
But so that's a good way to leverage yourself as a small trader, but to rely on it might not be enough. If you want to hit a conservative stride and you go for 1-2% profit,
Yeah.
maybe you make $500 to $1,000 a month. Let's just be honest, even in a so-called third world country, $500 or $1,000 not gonna take you that far away.
No.
Right? And the reality is that for a lot of traders on the retail side, even a $4,000 account is already starting to be that stretch for a limit, right? A lot of the people still hoping that the easy way out is go and buy for $500 a challenge of a $100,000 account and go that way. And I don't say it cannot work. Maybe for some it does, but you know, very often people do this. They might do okay for a while. Once they get funded, it's very easy to have that change in a trading style.
Yeah.
Maybe get greedy, maybe you're looking for the payout quickly.
I mean, sure,
and,
you know, these factors, they come in there as well, in all fairness, right? It's not all the nasty prop firms. That's not what I'm saying.
It's not only that, it's human nature. So even
yeah,
if I
yeah,
look
yeah, 100%. Like, you know, this is...
Even if I look for the highest funded Axis Select traders, for example, you can start to see that that there is a tilt in the trading style once they get to the top, especially if you have no more further steps to motivate you.
Yes, absolutely. And it goes both ways. Some people, you know, they decrease the leverage because the numbers look big, right? There are many things going on regarding that topic, you know, like, and it's very interesting, that topic, that when people trade different account sizes, you know, suddenly they change. And there's also the whole psychological aspect as well, and also when you depend.
Yeah, that's a whole total story. You know, the usual retail mindset is that start with a small account, let's have a huge risk, double a few times, and once I gonna get something semi-meaningful, then I gonna lower the risk. All the way not realizing that the likelihood that you're gonna double your $200 16 times before you're gonna lower the risk is not really that high, and probably never gonna get there. The same time, you know, the catch-22 that if you have a small account and you try to do the conservative approach, and let's say you have a $200 account and you make 2% gain and you made $4, then yes, congratulations, you get 2 bus tickets.
Yeah, but you know, the truth is, like, percentages are percentages, right? And if you want to, if you have a
you know, that's a little bit of a trap, you know, because it's a one hand, the percentage is a percentage, because you have nothing to lose. It's easy to produce a large percentage with a little bit of luck and a lot of over leveraging. on a small account, right?
Yeah.
But once you have a little bit more account and you have actually money to lose, people to answer, and
that's true. I mean, also,
and,
in the world of penny stock traders, they always talk in absolute amounts. I made 10,000 today. I made 50,000. But like on what account size? You know what I mean? That's what's interesting. Like if you make 10,000 on a 100,000 account, that's different than on a 1 million account. But they always talk in these terms. I really don't like it. Like, but of course, what you say is true as well. Like, it's not that simple. Percentage is not percentage. Trading a bigger account when it involves other people, especially, brings a whole set of other challenges. I mean, we could make a whole podcast just on that. I have a lot of things experienced in that.
maybe we should. My saying is always on this topic is that you cannot take your pips or percents to a supermarket to buy things.
Exactly. You always say that.
You have to get your dollar amount, and it doesn't matter how beautiful the percentage look like. Like let's say if I say, okay, this year I am doing good, and say I am up 130%. It really means nothing. It can be really super impressive, but if that 130% would be $1,000, is it the same impressive than that 130% is paying for my living? Not the same, right? So it's like, that's why I said is not to say that 2% on a $200 account doesn't look 2%. But end of the day, when you come to think of it, how many hours you spend there? Let's say you spend there.
Absolutely. Yeah, of course.
You spend there 10 hours to make $4. Then it's better to spend that 10 hours flipping the hamburger and then come back to trading when you have better account equity size. It is just the reality because
exactly. I wanted to say that's the reality. That's why some people rightfully say, you know what, I first have to save up and then I can trade properly. Absolutely, like it's true. Like,
but Jamal, sometimes people, when you tell them the truth, but they don't want to hear, that they might get defensive, or they might get upset at you, or they think you are maybe talking down from a high horse. I'm nowhere near to those big traders, for example, but you have to realize that end of the day, making say 1,000 pip, it's totally meaningless, and the percent also means not much without putting some context behind,
of course.
right?
And like you say, I feel sometimes, especially the younger generation, they have very unrealistic expectations. They think they take $1,000 and they become a millionaire in a year, because of all this bullshit advertisements, on all these fakers, all these scammers. What makes me so sick, Sultan? Like 90% of people talking about forex are all scammers. They either do not really trade, or they just are connected to some broker, or they just like want to sell something. Like for me, and I openly say, Zoltan, it has been a challenge, like even to make this project bigger. The problem is, if I do the usual marketing things, which other people can do, as soon as you're in the Forex arena, the algo pushes you all the way down, because, rightfully so in a way, because there's so much scam content out there, the people with their hired Ferraris talking all this stuff. But for the new generation, yeah, we are laughing, Zoltan. But the new generation, for them, getting bombarded with that content, that's what fuels that expectation.
The expectations are high. I always say, that if you want to drive for Uber and you need to buy a decent car, and the decent car gonna cost you, say, $25,000-$30,000, right? So not just an average car, 30,000. Now you can drive an Uber. How much you can expect out of your 200 hours a month? You can expect out, maybe, let's say you are lucky and you earn $4,000 on your 30,000. That's equals to about 12%. Then you have to, of course, have expenses as well, right? More so than a trader. But most of the people expecting not to put 30,000 or 25,000 or whatever thousand on a trading account, but expect that I'm gonna go buy a $25,000 account for $200 and I never gonna look back. And then they surprise when this is not happening, and it doesn't take too many chance to actually. It's an expensive lottery ticket to buy again and again and again these challenges, right? They would have a lot better chance, a lot less stress if they would have a little bit more equity And then they would say that, okay, I don't need to make 100% on my $200 account, but maybe I need to make 1% on a $20,000 account for the same amount of money, right? Which one is more likely? Of course, the 1% is a lot easier, a lot less stress. But
I agree 100%. Yes.
But it's just the expectations are very high. The other part is for the expectations that because of the sort of internet influencers, as now is not even, we are approaching the time when I looking through YouTube or something, the things are not even real anymore. Now it's AI generated stuff. And it looks real, but is even half of the stuff is AI.
Yeah.
And when you come to it and then you look at those videos and their expectations is up in the sky, right? And then when you think of it, I always say, okay, look, I am a retail trader. I make a living, but I'm not getting rich per se on this living. But so is not getting rich the teacher in the elementary school, the taxi driver, the line cook, the bus driver, right? The coal miner. None of them is a glam job. They're not really doing that great as well. So I should be grateful I'm not mining coal. I'm sitting at a computer at home, not working very hard. I'm coming from a line of work, cruise lines, right? It used to be everyday work, 30 days a month. You sign up for a 6-month contract, work every single day is pretty much 10 hours a day, the basic, so 300 hours a month. Right now, most of my trading days, I spending about maybe 3 hours on trading.
Yeah.
Now, should I be ungrateful for that if I make a similar income or more? I feel not.
No,
right?
yeah.
But if I looking for to wanting to make 300, 400, 500,000 a year, I cannot make that one from this. That's true also. Maybe I could if I would have that $100 million funding behind, but I don't have the 100 million funding behind. That's the reality. In the same time, I can still make a living. And
no, but
me,
can I
when
say something, Zoltan? Like, and that's maybe, and people who and maybe companies who watch this. I mean, come on, how can it be, Zoltan, that a trader like you doesn't get really, really funded big as well? You know what I mean? Like this world, on the one hand, everything should be so connected, but on the other hand, like you see that it has all gone the other way. It's like, even if it's in people's faces, they don't see it. You know what I mean? Like it's either people are really ignorant, or they have a short attention span, or they are bombarded with too much information, or they don't see the possibilities. It's, you know what I mean? Like in this world of today, and there's so much money around, like looking for investment opportunities and stuff. For some reason, the last years, like because also so many trading projects went south and didn't work, like the capital is at the moment not so keen on going to traders, like there's so much capital going into crypto, into, startups, into like AI stuff. But like, when it comes to proper trading.
There is always expectations, but they, like everything has a cycle, right?
Yeah.
This, like you could see that it was, I don't know, binary options. Then it became the forex prop. Now it's everything is around futures prop trading, because they say, oh, the future prop, that's not fake, that's real. Of course it's fake, is of course simulated. If that all that futures prop trading would be real, you would see the volumes on the exchange. You don't see the volumes on the exchange.
No.
They didn't went from that larger, right? So in the same time, I guess that one also gonna change in a while. For me, one of my thing was, when you start out and, always think of trading or thought about trading as I want to make it sort of like a business approach for myself, right? Instead of buying that car and driving an Uber. So the goal was, when I changed from the ship, I had that option open generally. I left them in a good term. I could go back anytime to that job. The difference was I don't want to. But I was looking, okay, will my trading survive 1 year? That's a good thing. Will it survive 3 years, Mark? Will it survive 5 years, Mark? I am slowly approaching toward the 10 years. You know, over this 8.5 years, basically since I'm full-time trading almost, you know, you see a lot of, you have good time, bad time, right? A little bit of a roller coaster. Let's just be honest, you know, you cannot have only good days.
Yeah, but overall,
Sometimes,
Zoltan, overall you did amazing. Overall you did amazing.
sometimes you have bad times as well. But if I
You're very humble,
survive,
Zoltan. You're very humble. I like that.
Jamal, if you survive 3 years, 5 years, 6 years, 8 years, right? The you can start to be, I can start to be, I feel a little bit more confident that maybe I can survive the next 2 as well, or the next 3 as well, or maybe until I am about to feel that I cannot do this anymore. The good thing in trading is more a mental thing. It's physically not really demanding. It's not like standing on my foot 10, 12 hours a day. It's not like carrying heavy stuff, right? I also streamlined my trading, you know. Now really my normal trading is focusing on London Open, maybe the first 2 hours, but really mainly for the New York London overlap. That's when most of the things moving on the market, the futures opening, the volatility is there, the activity is there, right? So I'm not looking to, you know, lots of new traders get into the trap. They come from a salary job kind of background and think that, okay, if I spend instead of 8 hours, 10 hours, I'm gonna get extra money, I'm gonna get paid for my overtime, right? But trading, you know, you get to the point that you realize that somehow often the less is more. So
Yeah.
I can keep up my focus pretty sharp for maybe 2, 3 hours. I don't kid myself. I cannot do that 16 hours a day, nor I want to do it 16 hours a day.
You know, that's a lesson I learned at the beginning of the year, Zoltan. You know, I had a really bad burnout at the beginning of 2025. And that's, you know, what I learned. That's like, yes, you're right. You know, if you just go crazy and you try to trade day and night and stuff, you're just going to burn out and it's not worth it. There has to be a balance for sure. Like what you say is very important. And you know, like the life quality should go up, not go down, right? And it has to all work together. Your lifestyle has to work with it, right? And like you also said, we're not paid by the hour. That's why I always say you have to love it. You know, you really have to love it. Otherwise, you will not follow through.
Yes, but in the same time, have to, you know, I like to think, you know, have to find that balance that kind of resonate with your inner balance as well.
Yeah.
When you make enough, but also it doesn't come. You know, how they have the saying going, trade to live, not live to trade.
Yes.
So it's kind of like, you know, when you feel that like you comfortable with what you're earning, but you also comfortable with your life that is not only revolving around trading, but you have time for some other things as well.
Yeah.
And because, you know, as older I get, you know, you always realize that the only thing is really finite in life is time.
Yeah.
Doesn't come back. You cannot buy it back. Even if you have more money, you cannot really buy it back what the time you lost. So instead, you know, kind of like to find that balance when you can have enough money to live a good life, but not really, you know, going head over heels trying to make a little bit more.
Absolutely. And oh, you know, I love that. It's good that you talk about that, Zoltan. And I really want to agree. That's, by the way, why you know, the last years, but some people know that I turned really, really into spiritual things, you know, the Castaneda world. I do a lot of practice. I do a lot of mindfulness practice and all of that stuff. I think without it, it wouldn't be the same. I need it, you know, like because otherwise, if you're only in this world, it's not good for your mental health. And also, you know what I realized, Zoltan, what happens for me, trading is almost like brushing my teeth. It has become automated pretty much, you know. It's like, so even if I'm on the markets, you know, even if I'm on the markets all the time, kind of, still, it's something I almost do, like, subconsciously, and I feel it's good that way. It's something where most of the things have to be automated in your brain. It shouldn't be like, it should be like day in, day out. It shouldn't be like, oh, we're going to make a killing or something. That's cowboy mindset. Like, I feel it should be really consistent. And
I totally agree with that one. It's like, for example, like I'm short-term trading, right? So I mostly scalping, if not a hyper scalper, but still on a short-term period. For me, unless maybe I testing some idea and then spending a little bit of time, which I try to limit maybe 2-3 idea a year. I don't go for deep testing
nice.
unless I see that something catch my mind. Try to balance. So on a weekend, I'm not sitting there and looking to plan hours on the next trade for Monday open or whatever, right? It's kind of like gonna come. It's what you say. It's just like any other job, if you start a new job, maybe the first few weeks is exciting, maybe the first few months is learning, but after it's becoming like a routine. You don't fear anymore your next day. You know what to expect. It's somewhat different, but mostly similar to what you used to have. And in a sense, I'm afraid to say, but yeah, in a sense, it's somewhat boring as well, because
It is.
you don't get that adrenaline rush for it anymore, right? But in the same time, maybe it helps you a little bit to look more, what is the good word, maybe a little bit more distanced and a little bit more cool-headed.
Yes, I feel that strongly. Yes, look, because think about it, right? If your game plan is clear in your head, and then you see things happening in the markets, right? There shouldn't be any adrenaline. Sure, maybe there's a time where you say, you know what, I'm going a bit more aggressive than usual because this is all aligning, and then maybe we are a bit more, let's say, excited. But most of the time, it's not. Like, even if they are, like, let's say, medium bias trade ideas, and you get stopped out. Okay, so what? Like, it's not that you bet a lot of money on this particular trade idea. I agree. What gives me excitement these days a bit more, Zoltan, that's why I started the Discord, to interact with others a bit more, because for many years I was very shut off. So I quite like, when people say, this is my trade idea, or what do you think about this? When there's a bit of interaction, like that is like, that can be a lot of fun. But, I know at the same time that nobody, like, trading is still a lonely activity in a way. Like, you are still responsible for the clicks you do,
I've been to that stage as well. For a while, I was running a Discord room as well, or try to interact more with even with students. Sometimes it's difficult, because they learn and then maybe they move on somewhere, or they have some experience that different. Few of them really get through sometimes a certain point. Even for the best intention, even trying to offer an ongoing support for them, because I am there, because I have plenty time during the day, if they have to reach out. I find, take for example, for excitement, maybe some new student, maybe even down 0.3% in a drawdown on a trade, and then feel like, oh, that's for me, doesn't excite 0.3% drawdown. That's kind of like just a regular day at the office. It's like, that's part of a normal trading thing. It's not really that bad. Or if you make a basket and you open your second trade, and you're already anxious about, oh damn, my second trade. It's really not that meaningful an event, right? So you get used to it over a period of time. And yeah, like I said, it can be somewhat dangerous sometimes when the time is really great. Then you get really sloppy a little bit about things, and you have to keep that control. You mentioned meditation. For me, it's like going out for a hike. Sometimes I just go solo, not far, just myself. Walk maybe 7, 10, 15 kilometers in the forest. The first 30 minutes, 1 hour, maybe you're still thinking about the usual things.
Yeah.
And then after, everything goes away, and you are just there, just walking, climbing up and down some small hills or something, and you forget about everything. You not think about your last trade, the next trade, the whatever trade, and it turns you out, and then you can really have that clear mind for sitting down at the computer. And then, instead of, thinking, I try not to be too biased also with my scalping. I have, every time you have an expectation, but you have to be open for whatever the market does, and then how you're gonna react for it. That's really the important part, more than me expecting something to go here or have that risk reward ratio, right?
Absolutely, and this stuff, I've made it all a routine. I try to make music, make sports, like, especially when markets are slow, because I know if you force anything, nothing good is going to come out of it. So distract yourself, or, like, balance your other areas of life out, so that when it's important for you to be there fully, you analyzing correctly and executing correctly. Like it's if you ask me, it's needed, this routine, and it took me a long time, really, Zoltan. Like when I was young, like when I was in my late 20s, and I was trading. Oh my God, I was shooting at everything I saw. You know what I mean? Like, I thought that's how I can do it. No, then with experience, you realize, no, this is not how this works, right? You have to be sitting on your hands most of the time. You need the patience to wait for right moments, and then when the moments are right, you pull the trigger, but you don't go crazy. Like you do it all in a controlled way. You maybe try to trade. You don't, try to make big jumps in your account overnight.
Good example, right? I was just looking the other day, my statistic for this year, and they have that statistic line, they're saying time in trade, the percent of the total time. I was just looking, my time in trade is 1% of the time. So that means it's like I've really 99% of the time I am not in a trade. So that means it's sitting and waiting for some opportunity. Like I said, for me, scalping itself is opportunistic. I want to trade the good great trades, the setups when it's not a 50-50 chance. And you mentioned sport. For me, particularly, I think about 2.5 years ago or so, I picked up, for example, badminton. Badminton is a quick game. It's help a little bit with keeping your mind in the fast decision stage.
Yeah.
Sometimes, it depends on your trading style. You can complement with some activity that helps, right? For example, I know for scalping, you need to keep fast decisions. Again, I am aware that I'm getting older. Few months is 50, right? So I need to keep my brain somewhat sharp, right? And then as I'm getting older, I am not really into computer games as much as I used to. Because the new ones don't really find that interesting. But for example, so like I say, hiking turned me off a little bit from the current problems. But for example, badminton is enhanced the side of the quick decision making. We play double games with a group, and so there you have to. That's a fast game most of the time. So you need to really plan a little bit ahead. You need to think about where you're gonna be, what you're gonna do, and a little bit scalping is the same thing. Because I don't plan on a daily chart that's gonna be for the next 3 weeks. It's need to be like I reacting what's going on currently, and if the price does turn at what I expecting, that take that, for example, the stop zone, just to turn back for the early gold charts, right? Is it gonna do in that zone what I'm expecting or not? And what if not? What's my next step gonna be? It's a mental chess, right? But you need to make quick decisions, so you cannot really have that long thinking. Let's call the committee and then talk about what's gonna be the next one.
Exactly. And another thing which has helped me a lot, Zoltan, and it's not very known, but like there's maybe you heard about this Carlos Castaneda, and he had this technique, it's called recapitulation. And I try to do it on a regular basis. And it's really helped me with trading psychology. It's basically like you make a list of memories, and you go through these memories, and you go through it several times, and you You try to emotionally detach from the memory. And even for trading, right? Let's say you could make a list of, let's say, one of the worst days you ever had, yeah, or one of the best days, and then go through this memory several times. And what I found is, like, the vast majority of people, right, the decision making they do, whether it's fast or slow, but the decision making is, of course, a result of the general patterns of behavior, right? Like, every person has different patterns of behavior, right? And I feel the more self-aware we are, the more you know exactly, okay, I tend to be rather this, and this. Let's say one person says, I rather tend to click the button quickly. The other one says, I tend to wait too long and miss opportunity. The more we work through this and go really deep, really deep into the psychology, you will see that, okay, in the moment when you want to make the trade, you will catch yourself, right? You will say, wait a second, I want to do the trade now because I haven't done one yesterday, or is it really like a good one? Like, you know what I mean? Like, I recommend everyone to go really deep, because I was so surprised how many patterns I have. I didn't expect to actually have so many patterns. Of course, in life in general, right? I may eat a bit too much chocolate and stuff. It's the same, right? It's some pattern I have. Yeah, like
I
it's.
can do that pattern.
And I even feel certain that some of those patterns are even in our genetic code. That doesn't mean you can't change them. You can change them. But I feel also that part of this is almost genetic.
But a little bit like what I meant on the trading style, to find what actually works for you. And in this no good or bad answer for it, but something that inner you feel comfortable with it, right? I started out basically trading initially, of course, not to mention the swing trading time, so the 1 hour, 4 hour things when I don't have chance. But I was really trading 5 minutes chart, maybe 15-minute chart most of the time from at the beginning. That was pretty much consistent for me. My trading style itself didn't change much also. Of course, it's get a little bit fine-tuned over a period of time, but even now with students looking back, some of the old Discord posts that I had 3 years ago, I had exactly the 100% the same trading charts that I have now, the same trading execution screen. Everything is the same, nothing changed. So it's like, feel like a rare moment, because when I look at the forum threads, mostly they evolve so quickly. Sometimes I look for the opening post and look for how it was looking 100 on or 200 or 300 pages later, and that changed a lot. So for me, what really changed was that 5 minutes time frame, or 15 minutes became the 1 minute time frame. But beside that one, everything is the same, and especially since I went full time, it is kind of like unchanged since.
Yeah, in response to that, I want to show you. Look, I have my internal diary, right, where I collect the screenshots of every market. And I feel the same like you. This is so repetitive. Look, this is from June. Yeah, look, option strike target, boom, it goes down and takes it. But look, if I go back to my overall diary, yeah, and I go like to any date in the past, it doesn't matter which one. Yeah, let's say this one. It's always the same stuff. It's repetitive. You know what I mean? It will not change. You see?
And that's what meant on that one, that over time there is no adrenaline rush. But if you find that contempt in you, that you're happy with your result, you're happy with the earnings in relative to where you want to be in your life, and you're happy with the time you're spending on trading, then you kind of in that balance spot when everything is okay.
Yes. And it comes down what you mentioned before, to be realistic, to not be greedy, to make sure that there's some kind of balance in your life. Sure, we are all ambitious, we all want to grow, we want to have more capital, we want to have better returns and all of that. And you need also that ambition. But at the same time, I feel it's necessary to tame yourself as well. Otherwise, it can go the other way very quickly, isn't it?
It's like take, for example, of course, this is a few different setups, and I also do a little bit differences as well in my trading. And of course, like, I am aware a lot of different trading style, and I talk a bunch of traders from here and there, from the forum or maybe in real life as well, occasionally when we meet with somebody else, right? And some, you know, in the
What's
industry,
your experience?
some not in the
Sorry to interrupt you. What's your experience regarding that? Like, do you feel after you have seen different people, do you feel that they can kind of learn your particular strategy and apply it in the same way, or do you think it all?
I met some who can. I met some who wanted. You know, I do mentoring occasionally a student one-on-one, time to time, but I would say the outcome is not really just in my hand, right? Very often when we do the practical test, the live trading part, they still get very consistent results until we do the trading together. And then when they feel like they go on their own way, often the results seem to be changing, right?
Why do you think that is?
Oh, I met, for example, a student. We stayed together a couple of weeks, only winning days. Then he went on his own 2 weeks later, catch up with him. He has already 2 new indicators on the chart. He told me he's trying to improve on what he learned. And I said, you know, I am using these things for years like this unchanged. And I appreciate the, you know, the enthusiasm. And I'm not saying that what I am doing is the best thing. Definitely not.
Right.
But
You know what? This realization is very important in trading. This humility, I think, is needed. That's exactly, you know, to say like, you know what, look, this is what I do and it works. Now, it may not be the most, you know, like maybe other people squeeze more pips out of it. I don't know. However, I know that what I do works in the long run and I fully trust it, right?
exactly, you know, instead of trying to compare what the others do without knowing their equity, their full conditions, you know, it's like, you know, in this case, I didn't say that he could not improve what I am doing or what I taught to him. I was only making a small note that maybe after 2 weeks being on his own is a little too soon. That let's get familiar with something that seemed to be having some proven results to back it up, and then do the improving maybe in due time when you have a little bit better understanding, especially when something used to work for you the right way. You know, I often also, one of the pattern I see with students often, that once the lessons finish, for whatever reason they have success with the approach, but they tend to gravitate back to their own trading.
Yeah. You know what I feel sometimes, Sultan, they have to
Even if they profit, they tend to go back.
Yeah, they have to make it their own in some way. Like even with the market causality, I feel like what's needed in some way is that everybody who uses it also makes it a bit their own in terms of, okay, I want to trade this particular situation. And you know, like if I put together a template with some indicators and just gives me the feeling of identifying that particular situation better, you know what I mean? Okay, good. But I feel like many people that need that feeling, oh, it's mine. You know what I mean?
Yeah, but you know, it's like a little bit like that. Take for example the example I give you with the stop run type of thing, right? Take for example that, okay, I did that. It's a variation on the typical use of the market causality, right? But I have also quite a bit of experience on my own things, and I can see how that type of things would collaborate with my type of chart, and then see if they can, maybe one can confirm the other, or one can tell you that, okay, look, here is a reminder, there is maybe a stop cluster, so maybe I'm gonna wait for it. By the way, they most of the time that stop clusters and my targets seem to be anyway the same zones, but then you can confirm for yourself, oh, look, I normally wouldn't look, but maybe the price is still heading there. Maybe there is still dumb money sellers. Let's see, maybe heading lower, right? But that doesn't mean that without understanding first at least somewhat one idea, then try to just modify it, you know, carelessly.
Yeah, exactly. You know, I agree. Like, it's a human, you know, there's something in human nature about that. It's interesting.
You know, I can tell you, I have one. I could say trading buddy from the forum before. You probably familiar with him. Also came across Rick.
Yeah, yeah.
Right. So he's a great trader, right? But I know him for years already. We used to chat regularly. Sometimes he was in my Discord, so even daily, right? I know he used somewhat similar, somewhat different approach, but beside that, he's a successful trader and he's doing good. I only see that maybe every year he seemed to run cycle through some different method. For that was the things. It was one time sideways, sine wave, then it was a footprint, then it was cumulative delta, then it was whatever else envelopes, right? So it was always something different. And personally, I thought that each time when he was doing something that seemed to be good enough, successful enough, and then he jumped to the next thing.
Yeah.
And I asked multiple times him that basically, how do you feel? Do you feel that this method is any better really in net terms than the last one was? And most of the time, the answer was not really.
That's super interesting. That's very interesting.
But you know, it's just tempting to keep for jumping to the new things. For me, I make myself a goal to be consistent. I'm not trying to change up my trading style too much. In a sense, you could almost say like a one-trick pony, but
Yeah,
it doesn't have to be one trick. I know more than one trick, and I can do inner day range as well. I don't need to really trade at the extremes and such. But if you feel that you actually can consistently pull a sufficient amount of profit out of the market,
yes.
then why to change? Why to fix something that is
Exactly.
not broken?
You're spot on. You're spot on. And you know, people also underestimate, as soon as you take on a new approach, they underestimate how much actual testing is needed in order to even somewhat know that this is a valid, consistent, sustainable approach. You know what I mean? Things may look very fancy in the moment and you think like, oh, this looks really good. Well, what does it help you? You know, like over a period of 4 months, this thing may completely disappear, like with the ICT stuff, you know?
A very valid point. The last time I pointed out somebody on a forum that completely ignored my answer was testing something. I think it was one of that popular thread about testing the opening range bar breaks or whatever. And then I was pointing out that he said this pair I don't have that much success or something with the stop loss size, and I'm gonna change for the next month. And I was just pointing out as a friendly note in a private message that just to make sure that once you take one small thing for the changing there, the
Yes.
whole total previous data flow, the data sample is becoming invalid.
Exactly. And you know, this is exactly it.
Once you think that you're going to improve something, but you don't know the past data, what you're trying to improve on.
Exactly, exactly. You know, this is a big lesson I learned.
Different, right?
Yes, Sultan. Like there was a time where for 4 years I was testing every day, and that's the lessons I learned. You learn that if you have 20 factors and they all interact, and then you may change this one or this one, yeah, maybe it improves something, but it may also take away something because it all interacts like a neural network. And then you realize how fragile a trading system is. As soon as you change a setting, you change this, you change that, the whole thing could easily die off. And then you also realize most trading strategies, you may look, I can take the 10 most popular indicators from MQL, yeah, and put them all together into an EA. And then maybe, you know, for some time, it may actually be okay. I guarantee you, after a few more data sets, it dies off and never comes back. It just loses. And then, you know, people are very confused how this can be when things look so great on the chart. But as soon as you run it through some proper data, you're going to see the reality. And you know what? That's not surprising because think about it. Even if the smart money algos just change the range of the price, this one factor, that's all they can change. Already all the systems get destroyed, you know, because your system depends on, you know, like the distance of stops or take profit or whatever, right? So, or settings of indicators. So, you know what I mean? Like, I agree a lot. Like, this is, it's, people underestimate how fragile this is. Now, imagine you take a manual system, right? And it's even more open, and then you start changing stuff.
You know, it's one of the things is that you know, even like I mentioned, subconsciously people, you know, you're seeing something most recent and you try to curve fit for it a little bit. And
Yes.
the other thing is also, you know, it's really amazing that that people really want to again and again reinvent the wheel.
Yes.
You know, let's say last time, I give you an example. I was smiling on this really hard. You know, last time I looked for MQL5, and my son is just the IT, so I was just wanted to give him a screenshot how the freelance things look in MQL5. And there was people looking for somebody to code them an EA, and that was somebody was asking to code an EA for a simple moving average cross. And I was meantime talking to one of my students, and I was telling, you know, pointing out that, look, I thought this moving average, simple moving average EA is the one single EA that is actually as a sample included in every MetaTrader by default. So the guy was there looking for paying for the same EA to get coded for a simple, I don't know, 50 and 200 moving average crossing. Clearly, that's not a profitable approach, but you can get some certain periods, like let's say gold is having an uptrend, a strong uptrend for 2 years, that can work perfectly well. But I guarantee you, everybody knows that's why it's a free EA sample in MetaTrader 4, because that's really, everybody knows from kindergarten level, this doesn't gonna work.
But also, you know, like, people underestimate all the factors. Look, even if you take that simple moving average cross EA, you still need to come up with rules for, right, exiting, entering, stop management, lot sizes, trading times, spreads. You know what I mean? Like, there's so many rules, even with the most simple strategy.
No, for example, trading times you mentioned, you know, one of the good example, even when you're looking for something, you back testing, for example, something for later manual trading. But you know, maybe that back test is taking you a trade at certain time. But am I gonna be around 3 a.m.? Am I gonna be around 6 a.m.? Maybe yes, maybe no. Chances are probably not, right?
Yeah.
So it's like when the moving average crossing, that's fantastic. But when your 15-minute chart, the moving average crossing, chances are maybe the next 6 hours you're still sleeping.
Absolutely, you know.
Then what about that trade? Are you gonna take it late as well? Was looking as a fantastic entry, but maybe you never entered.
Yeah, absolutely, you know. Yeah, I mean, like, there's so many factors involved. Like, honestly, I wanted to make once a really good video about this. I didn't have time to do it yet, but look, I show you one strategy just to show people what I'm just trying to find, like, the real life.
Maybe we're gonna make a next podcast one time,
Yeah,
and then
exactly. It's too many. It's too many.
a little bit about some of these trading styles. I can only tell you mentioned time here, and that's my first filter for trading, the trading time. So I'm not even looking for times that is out trades outside for that time. I can make exception, but that's why they are exceptions. So that's not something I'm looking for.
Absolutely. Okay, Zoltan, as a last topic, I wanted to talk about something just in general terms, not in precise terms, but because we both know we had this brief discussion about from a business perspective, you also have to make sure that you're treated fairly. You know, I this year, honestly, Zoltan, without going into details, to make a long story short, you know, trying to help out, you know, like trying to make things work, I kind of went all in. And we were talking the other day, no, and it reminded me a bit of this quote by, they say, from Trump, no, when he was a real estate developer, and at the beginning he had like personal liability, you know, so that if the project went south, he had to pay it. This famous story where he went past this beggar on the street and he was thinking, this guy is 200 million richer than me. You know, just as in general terms, like, I think we both know, we also had to learn that it's important to make sure to not always give everybody all the goodwill, but to make sure that we are also treated fairly. We're not taken advantage of. Do you have any realization, any lesson out of this?
It really goes back, yeah, to that your own money is being the ones to rely on. At some point I was also involved with the introducing broker type of things, like an IB,
Okay.
kind of trying to raise me money. I was also in that situation when I realized that at some point the performance was doing good, but money was not being raised, right? There was relative small amount traded with a high multiplier, never a larger amount with a normal multiplier. And then you start to realize at some point when you're not having in a hand on your own copy trading, or you share, that was early on, share a master password. MetaTrader is like that, for example, when you can do some raw copying very easily, even with a read-only password, somebody you give out, and they can copy your trading.
I also had that. I had the same problem as well, Zoltan. Yes. Like,
And
like
and something that you realize that maybe sometimes something going on or not going on, but the things are not necessarily always as is promised or as in face value. And
yes.
not every time everybody shooting it straight, and you're trying to build hopes on or a business plan on something what may never come, and you realize it 8 months, 10 months later that, oh look, here is 100% profit, and here is not coming that promised $500,000 or $1 million account,
Yes.
and we still stuck at say $120,000. And then you say that, okay, now what do I plan to go forward? Because for whatever it might be there the rest of the money, but it can be maybe copied without your knowledge
Yes.
on a trading account.
Zoltan,
And
this has happened all my career, to be honest with you. People promising to provide investment capital, then some of them actually, secretly copy trading on other accounts. Honestly, I've seen it all, Zoltan. It's a jungle out there. That's the truth. And
thing, as a trader can make also mistakes. I am not without fault, of course.
me neither.
But in the same time, just particularly talking about a lot of the time, maybe especially when you are early out in this one, your, or in this case, my naivety was maybe used that, you like to think that the world is beautiful and everybody is nice to you. Just think that maybe is not always the case. Sometimes may or may not, with your knowledge, advantage can be taken on you. So have to be aware of that one as well.
I should really listen to that. That has been a big lesson this year for me. Exactly what you say, yeah. Like even if people
Even you are a few step above me, so like talking about like trading capital and then the situation, I think it's happened in every level and can happen in
every level, Zoltan, and even when I look at the really big boys and stuff, like my brother-in-law and stuff, it's always, how can I say this? Not a battle, but you always, like in any business as well, you always need to hedge yourself, let's say, and I have been the same like you. I've been quite naive, I've always assumed, oh, this guy said it, or even wrote it, and or even as a contract, so I assume that this is what it is. And then later, like you get surprises and unexpected. Yeah, without going into detail, like this year, that was basically put into my face, and it's still not resolved. But I'm trying to stay always positive. I'm trying to always make things work, push through, do the right thing. That's maybe what I feel, Zoltan. As long as you are determined to do the right thing, nothing can really happen. Other people can maybe mess up or not stick to their word or misguide, and sometimes they may do so not even out of bad intention, but because of other reasons. right?
Circumstances can change, like when, like I said, one day I have a 1.2 million funded account, and the next day 1.2 million funded account went away, right? So take, for example, like in just in 5 years, when I had maybe up to $2 million funding, which is pretty solid in the retail level, especially all that time back, it can overnight change, not even because you take a loss or whatever.
Yeah.
You can do the whole right things, and things still can go beyond. And when it comes to outside money investors or a prop deal or whatever, nowadays I for my own peace of mind, I look at these things, if they come around, that as something like an extra or a side income stream. I'm not really building on them. I'm not really expecting them to last. If they are there, that's a great thing. If they are not there, then I still should be able to get by, and not really focus too hardly on them, not really wanting for yourself that extra disappointment things.
Yes.
I think when it comes to your trading, the best thing you can do to yourself is to keep a stable mental level, so same like with the losses, so try to be kind of detached enough from them that you don't do the revenge trading, you not double up the sizes to recover and such things. A little bit same with these other deals. If something comes around, it can be a welcome thing, but I'm not gonna build my plan anymore on anything like that.
Yes.
If it happens, good. If it doesn't happen, also good. I'm not getting attached to them that maybe they're gonna last and how long they're gonna last.
I fully agree. This is a great mindset, because the truth is anything can happen, and that's why it's important also to stay humble. I mean, I always try to be very humble, but it's needed all the way. Like you never know. One moment you may be really up and do well, and the other moment, like you say, everything changes. People change their mind unexpectedly or whatever, and like everything is different, or even macro factors, right? Like COVID or whatever. Like everything can always change. That's why it's important to stay humble, to always be able to start over again and stuff. That's a reality of it. To not compare yourself to others neither. Like to understand that we have our individual path and way, and sometimes it goes like up and down and all of that. That's very, very important.
Just maybe to add, like for example, this year I went back that even if it's not necessary every month to withdraw money from my trading account, always there is this concept, especially for retail traders, is the biggest thing to let's compound the small account to a big account. And that's all sound again great, especially on a spreadsheet type of level, that you're gonna compound and it's gonna go and then go and compound really quickly up to the trillions. But the reality is, like, I inserted that also to be grounded a little bit more, that this year especially, again, I'm focusing that every month I take some of my equity out.
Yeah.
I try to aim about 4% a month if I can, and then whatever is above, then I try to leave that to compound. So the account is growing slowly, the equity, but in the same time, I take enough out for my living.
Yes.
Do I need it? Do I not need it? Doesn't matter, because in this case, if something happens, you have to be also aware. Even a black swan anytime can hit.
Yes. Yes.
The question is, can you go on with your trading? Can you replace some of that money to build back yourself up, right?
100%.
And the ability that you taking money out, for me, it's meaning a little bit that you getting detached from the feeling that it is just like a monopoly money and a fake money or demo money, because it's easy to feel that it's all about numbers, the numbers growing, everything looks good, but it's becoming like a video game at some.
Yeah.
And
Like a fixed percentage of the profits, you take out.
part of the profit every month I try to, and to make it more exciting. If I have a losing month, I still trying to take out money, but I have, since last December, I didn't have a losing month, so I'm doing good in that department. But at the same time, you know, because that money, once it's come to the bank account, get credited, then I can see, okay, bank account is growing a little bit as well. So I am doing something that actually put me ahead. And is not only like sit down for a computer game and trade a number that seems to go up.
It's true, you know.
Easy to forget that we're doing, you know, it's like, you know, that concept when people talk about that I set my stop loss to break even and now it's the market money is a free trade and you are already up 100 pips, but that's a market money.
Yeah, absolutely. Yeah.
It's my money. I can cash on it, right? So, you know, it's easy to feel like that way. And then when your 100 pips go back to zero and hit your break-even stop, you say, oh, that was just the market's money, right?
That's, you know, why when you catch those 100 pips, I often take a partial profit, even if it's psychological, you know, like even if it, because then it's very painful if it reverses.
Because otherwise, it's just the market money. Who cares, right? The only problem when you are in a stop loss, that's not just the market money, right? So it's like, you know, it's like, yeah, it's a bit, you know, in a good part, especially when you get good in it, like any other job, and you're comfortable with the things. It's becoming really a little bit of a mental game that how to keep yourself somewhat motivated, not too much in a fear, not too much in a greed, not really put the hope unexpectedly high, not really undercut yourself by being too conservative and not making anything. You know, it's not that easy, but in the same time, you know, it's not that difficult neither, you know. It's
yeah, and you know, that's, I think that's what it is, you know, that is that mental game. That's in a nutshell.
I can imagine worse jobs as well. I have plenty worse jobs as well. So yeah, but in the same time, you know, if you put your hopes to that influencer level of stuff, then yeah, well, it's not gonna happen. Definitely not gonna happen in near future. And when I'm honest to myself, I'm not really cared that I'm not seeing myself in a new Lambo. I'm not really that kind of person, really, who needs.
Yeah.
So when, you know, I can admire it from, yes, like every guy pretty much, you know, like a nice watch, like a nice car, like, you know, sometimes you like to go for a nice hotel, but in the same time, I'm not seeing myself the jet setting lifestyle, flying around private jets and sitting in the Lambos and everybody is coming and, you know, I don't like to be the center of attention, really.
Yeah, because the truth is, you know, Zoltan, there's nothing there. It's a complete illusion. And if that is what, you know, people make their main life purpose, it's empty, you know, like you know, I'm also, and hope it doesn't sound arrogant, but I'm far beyond that. Even if I were, you know, like a billionaire, I still wouldn't, you know, like,
I don't see that I really fundamentally want to change my life like that, you know. Even if I have, say, twice as much money or 3 times that money, I don't see fundamentally wanting to change my life. Really.
Yeah.
What I meant, like I am, when I say that I am, you know, finding that balance for yourself where you inner wise happy as well with your results, and instead of really chasing the maximum, you can be happy with what you have in a sense, you know. And I could have more, but I have enough, and I am happy with the enough at the moment. All I can say, 8 years doing this full-time trading, at this very moment, I feel that I have the best balance in my life looking back in the past, whatever, 30 years, right? So I cannot say that my work-life balance was any better any time in the past than it is now. So,
but Zoltan, that's amazing, you know, I really admire that.
It come down only for the money part, because once your bills are paid and you get the food what you like and you okay with your place where you live, I don't need a palace to live. But then the rest of them is just to balance, instead of working 300 hours a month,
Yes.
I can be working 60, 80 hours a month and getting, time in sense, time is money, right? You can get all what you want out of that and be still happy with it, so it's like, personally, when it comes to it, I can make the statement, the work-life balance in my life is the best I can recall in the past.
Yeah, but Zoltan, I admire that so much more than some super rich guy in the city, who was doing like, let's say a roadshow after roadshow, and most of the work is also marketing, rather than trading and having the right connections and getting the right capital from the right people. I admire what you just said. That's what I really admire. And I have the same mindset, Zoltan. I'm like, sure, there are nice things in life, but I would never wear like a good like a brand stuff or whatever, you know what I mean, like, because think about it, right? You buy yourself this brand stuff that means
that one, I used to have always, a tie jacket, white shirt, iron, whatever, for a restaurant type of business. I told myself, I want to wear a tie and a shirt again unless I feel to. I don't want to shave daily or whatever. It's like, I don't want to deal with these sort of things. I just want to enjoy casually whatever I feel comfortable. And it's not only what money can buy for you, because money cannot buy you that freedom necessarily if you use it the wrong way, right?
wow.
I am one of the things also, it's important, of course, when you trade there, that you not trade, when it's possible, not trade from that pressure point that you owning money for somewhere, you need payments to make, right? I have that freedom. Whatever I have, I own them, the things, right? So I own my car outright, I own my condo outright. Nothing fancy, of course, but in the same time, I'm not owning money on that. I don't have the issue that
Exactly,
if I tomorrow lose all my forex money, I still not gonna need to starve the next day, or I don't need to worry about making the payment, right? Which is giving you the luxury that you find your next thing then, or find how you're gonna stand up, right?
Absolutely. But look, I mean, like, congratulations, Sultan, because the path you have been going through is really impressive. And thank you so much for your time today. And I love that we went so deep on things, Sultan, unexpectedly, but that's really also what it's about. And I think people are going to appreciate that as well. And thanks for sharing that. And honestly, like, again, my highest respect, Sultan. You have been really amazing. You have been transparent. You've inspired many others. You have proven that it's possible to do it. It's not easy, but it can be done, right? You have been very early being funded as well. So, that's absolutely incredible.
Can be done, can improve the things. And I'm really happy that you reach out to me, Jamal, again, and then we have a little bit of catch up. It's always
but the
great.
next podcast we don't do in 5 years. We do it earlier, okay?
Maybe we're gonna do it sooner, right? If the people enjoy our talk, maybe we do, right?
Yeah, 100%. Let's do it soon again. Guys, ladies and gentlemen, if you like the Time with Sultan, please leave us a like, leave us a nice comment. And if you like that stuff, we're going to definitely also do another with them sooner than later. And then maybe also we do, we did some charts as well, but of course you can always do more. But I love this talk. It was really great. Thank you for your time, Sultan. And yeah, he's on our Discord as well. And of course, you can also private message him, and I'm sure he's going to give you tips and all of that stuff.
Thank you very much. And thank you, everyone, for watching.
Thank you, Zoltan. We talk, okay?
Soon. Bye-bye.
Bye. Take care.